Hey everybody, welcome back to the channel. Today I'm going to go over the ICT Silver Bullet and session liquidity that ICT talked about yesterday in his live stream, in his training session. He had at the noon to 1:30 block of time. He also showed it from noon to 1, so it was a little confusing, but he had it blocked out, and then he would show that as a sweep of liquidity, and then he would target the top line, okay? So I want to show you how that played out today and how you can get this box on your chart using a free indicator. So I'm going to show you how that works, okay? So for right now, I have this vertical line here for 1:30 p.m. I have 2 o'clock and the 3 o'clock, which is the last hour. Macro starts at 3 to goes to 4, okay? So if you go up to indicators, this indicator right here that says DR/IDR-V1 by the master, that's the free indicator that you want to use. It's actually meant for DR, IDR. I do have a couple videos on my channel about that. I'm going to do some more and explain it, but we're going to use it for a different purpose today. So when you come here, that's what's going to show. It's going to say DR, IDR, V1.5. Click on the settings. This is what you're going to see. You're going to have a lot of different times. You're going to have a lot of different things check marked on checked off in blue. Unclick them. And make sure that you have regular clicked on, show DR lines clicked on, show DR IDR box. That's this box right here. Otherwise you don't know where it stops. So I have them show the box. You're going to want to change this to DR because otherwise it would use the interior lines. We want to use the outside lines. And then extend DR lines. Everything else should be unchecked, okay? Now I'm just showing the regular DR session, so I'm using it for a different purpose. So this is the RDR time is what we're talking about, okay? So if you recall from the video, if you watched it yesterday, ICT said from noon to 1:30, and he also said from noon to 1 is a time section that the algorithm will refer back to sweep liquidity, okay? So and if in this video he had, this plays out exactly like yesterday. He had the top line extended all the way through. He had the first hour bottom because then before 1:30 it took that liquidity out. So it should have been down here for an hour and a half, but he showed it up here. A little confusing. So I'm showing it at noon to 1, and they took liquidity out, but then at 1:30 after that they came below the noon to 1 low. Okay, exactly what happened in his video yesterday. Okay, go back and watch it. That's exactly what happened. I have my settings here, and I have the lines, this RDR lines from noon, starting here, extended out to 1600, which is 4 o'clock Eastern time. Okay, reason I have them is because I want to see where does the candles break, and then it shows me my other target. Okay, so that is the settings for this. So here's 1 o'clock, they sweep liquidity, comes back up. 1:30 is when the algorithm kicks in. What does it do? It comes back down and it goes below that noon to 1 o'clock line, just like yesterday, and trades back up, targeting this line up here. So what do you see? You see a fair value gap right here. You could buy right there because it comes back into it. Put your entry there. Your stop would go below the first candle, but the middle candle is actually lower, so you go below the lowest one, and then you'd target the top line. Just like ICT told us yesterday, this would be a trade. There's 8-point trade right there, okay? You get out right there. You would see, now here's the silver bullet. The silver bullet is right here, and you're like, okay, so it's going to take liquidity and then reverse. Well, where would be your market structure shift? Would you use this one right here? Or would you use this one right down here? For me, it'd be the one down here. But so a lot of people would go down here, but it never gives you that. So if it doesn't give you that entry of a reversal, then you're still bullish. And if you are still bullish, where are you targeting? Where could you potentially target? Well, if you looked back, you would find a bunch of highs that are around right in here. And then you'd also see a fair value gap from yesterday's PM session right here that hasn't been filled into yet. So you put that in there, and that's a good range to target. Okay. So we're just seeing how price action plays out. And I see over here that there's a fair value gap right there. It was respected here. It was respected there. The body, respected by the candle, the wick there. The candle body is here. So I'd be taking that trade right here. You could get in right there with an entry, and you'd target low of that fair value gap. That's 8 points again. This was 8. This was 8, right? Your stop would go below the first candle, one tick below, which is right there. So we're good there. It's a good trade right there. And you're like, hey, wait a minute, hold up. I need a market structure shift. Like I prefer, me personally, I like to have a market structure shift. But you didn't get that here at this from 2 o'clock on. Okay, you're using market structure to go long at this point right here. If you had to have market structure, you know, you could say, hey, there's a short-term high cleared, because that's a short-term high right here. Broke this swing low, so that's, you know, when that gets broken, if this could be what you need to see. You need to see a short-term high being taken out to tell you that, yes, we're still going long. Well, it does. It trades all the way up close to your target and then trades back down. Well, leaving behind a fair value gap, leaving behind a volume imbalance. And you're like, okay, where would you get it? Where would you get in? Well, I would get in right there and right there on the fair value gap. Well, that's cherry picking. That's cherry picked. Okay. Well, let's see. From this swing low to this swing high, 50% is that top of that fair value gap. So could you have gotten in right there? Sure, you could have. Could have gotten right there. Right below, you would have targeted your 5 handles right here. Here's 2 to 1 is right here. Actually, let's go 2 to 1. And there's your 2 to 1. Get in wherever you want. It just has to be in below in discount to go long. So if it was for our fair value gaps were only in premium, we wouldn't have been able to take another entry. But because it's below the 50%, it's in a discount to go long. We could do that. So you can get in the fair value gap or the volume imbalance. Just know that your stop has to be below the volume imbalance, because it can come into that because there's 2 PD arrays right there. So manage it however you want. You'd get out right there. The second one would get out right there. Okay, so it takes you to through the silver bullet hour. Okay, well, let's see how the power hour goes. Here's the power hour. Let's put this second line on here. Power hour, 4 p.m. last hour macro ends right there. Okay, so what would you need to see to go short here? If you wanted to go short, like this is the high, you're saying, hey, this is the high. Let me get this off here because it's just showing a lot of lines. If this was the high and you're seeing this starting to break down, where would you enter? Would you say that this was a market structure shift for you and you'd try and get in? No, it doesn't leave you any fair value gaps there. So then this one gets broken, and would you get in on this fair value gap? Could have. It's valid. It's a short-term low being taken, and you could have got an entry. For me, in my rules, okay, I would either use this one right here or that one as a market structure shift. Now, depending on time, and right now right now this would be 318, 319 right in here. You could use this one for sure. Where's my target? Well, my target is below this swing low right here would be my target, or this swing low would be my target. See, this is a fair value gap. You could have seen this volume imbalance, and you could have sold short there and got in there and still got your 5 handles, with your target being these relatively equal lows. Just throw that on there. For your target, there's 5 handles. Now you could definitely have used this up here. Let me just mark this out, so I don't want anyone to say I'm cherry picking. I'm just showing you what you could have used. Oh, okay, we gotta turn this off. Use that right there, and you could have gone down here and you could have gotten 7 handles moved right there. Okay, so those are your 2 entries for power hour. Now, could you go long? Well, that took liquidity down here from the sell side. It took all the sell side liquidity out when it came down, sure, and now you're going up. And you know, I don't see anywhere reason to go long over here. It moved up quickly. So there's 1, 2, 3, 4, 5 entries, all based on ICT methods from today. This is the entire afternoon session from 1:30 through the power hour. Right there. Let me just move this in so you saw one shot. That is how you could have seen price action play out.